Welcome to this training video on inter-entity transactions. My name's Anne from Orchid Systems, and today I'm going to run through the GL functionality within inter-entity transactions. Inter-entity transactions allows you to automate loan account entries. It works within one Sage 300 company database and/or across multiple Sage 300 company databases. It automates the due to and due from loan account transactions. It works on all GL transactions regardless of their origin, and therefore works across all subledgers. It balances the transactions by entity at a general ledger account segment level. This functionality is covered in a separate training video. One of the other main features of inter-entity transactions is the ability to auto-create AP, AR, and/or GL reallocations, and this is the subject matter of this training video. It automatically triggers additional transactions, GL, AR, or AP, to automate complex inter-entity transactions. And the final functionality within inter-entity transactions is cash management. This too is covered by a separate training video. It allows you to allocate payments or receipts for invoices in one company using a bank account in another company. Or you could transfer invoices from one company to another company for consolidated processing. You can also process bank transfers between companies by only recording the transaction once. And it provides a consolidated AR and AP age trial balance. For general ledger triggers, there are three types of transactions that can be automated: accounts receivable, accounts payable, and GL reallocations. And all these transactions can be automated and are created within the same company database. Triggers are available in both editions of inter-entity transactions, single company and multi-company. And to explain the functionality of GL triggers, I'm going to do three examples in this tutorial. I'm going to do an AP reallocation. For example, if Entity 1 receives rent on behalf of other entities, we can automate an AP reallocation, an accounts payable invoice, to pay the other entities the amount of rent received on their behalf. The second example I'm going to run through is an AR reallocation. For example, if Entity 1 pays the equipment lease costs on behalf of Entity 2, we can use GL triggers to automatically create an AR invoice for Entity 2 to repay the equipment lease costs to Entity 1. And the last example I'm going to run through is an example of a GL reallocation. For example, Entity 1 may pay the audit fees for Entity 1 and Entity 5. But want to recoup the audit fees from Entity 5. And they may want to record this in a loan account, as opposed to within a subledger. You can also use triggers to do GL entity substitutions. This is a method of allocating loan account entries to target databases by virtue of specifying an optional field, as opposed to choosing a GL account that belongs to the target database. This is covered in a separate training video, the Inter-Entity Automation of Loan Account Entries training video. The topics we're going to cover in this training video are installing and activating the module, checking the license file, making sure that you have Inter-Entity Single or Inter-Entity Multi installed, and assigning the visual process flows, as we have a visual process flow for the setup of GL triggers, which assists you in this setup. After activating, we're going to go ahead and configure the triggers in Inter-Entity Setup options on the Segments tab and on the Processing tab, and creating the trigger entries in the GL Triggers screen. Then we're going to go ahead and process some transactions. So we're going to enter the source transaction, be it AP or AR, post it, and then post that associated GL batch to see the trigger entries being created. And we'll keep an eye on the GL Triggers audit inquiry for any errors that may occur. All Orchid modules can be downloaded from our website, www.orchid.systems. First, you need to log into our website, click on Product Downloads, then select the version that you want, and then the programs that you want to download. Inter-entity transactions single company, multi-company, triggers, cache management is all in the same install shield. So you would download inter-entity transactions and then run that install shield. The options that are made available depend on the license code and activation code that you have. After installing the programs, you need to activate the module in each of the companies that are to be the source of inter-entity transactions. And for GL triggers, as the transactions are only created in the source company, you need to activate in all the companies that you need GL triggers to run. After activating the module, we recommend that you assign the visual process flows to those people who will be setting up inter-entity transactions, as they assist you with the processing and setup of inter-entity transactions. And for triggers, we need this process flow. Before we go to look at the setup of inter-entity transactions, triggers, we will just have a look at the license file. So in this particular installation, I have a multi-company with cache management license. So triggers is included in that. Triggers is also included in single company inter-entity transactions. For the GL triggers visual process flow, the setup of the GL triggers is the top half of this process flow, and then using GL triggers is the second half of this process flow. So we're going to run through the top half initially, and then we'll go ahead and process some transactions. This training video assumes that you have already done your inter-entity setup with respect to loan account automation. Accordingly, we're going to concentrate on the setup needed for triggers only. For triggers, you need a source code, and this is the source code that's going to be used for the automatically generated general ledger journals. You also need GL accounts, which are going to be your trigger accounts. For example, this equipment lease or rent account for Entity 4 is going to be used when I want to allocate an equipment cost to Entity 4. And then we're going to go ahead and configure the GL triggers on the Inter-Entity Options Processing tab. You need to turn on Inter-Entity Triggers and specify your source code for inter-entity trigger entries. The GL substitution source type and GL substitution optional field is both used for automatic loan account entry and is covered in the inter-entity transactions loan account entries tutorial. It is easier to discuss these remaining options transaction type by transaction type and with respect to the example that we're going to go through. The first example we're going to do is an AP reallocation. We're going to record an AR invoice for rent received in Entity 1, and a portion of that rent is owing to Entity 3. Our GL trigger is going to automatically raise an AP invoice to Entity 3 instead of using loan accounts and showing the rent owing to Entity 3 in a loan account entry. When we record the AR invoice, we're going to credit rent received for Entity 1, credit rent received for Entity 3, and debit our accounts receivable control account. And when we post this in the GL, our trigger account, which is the rent received for Entity 3, is going to be debited and credit the AP control account when we raise the AP reallocation invoice. And the setup we need for this AP reallocation example is to turn on inter-entity triggers and to fill in an optional field for the AP offset if we want to be able to define the vendor at the time of creating the AR invoice. In our case, we're not doing that. We also need to consider whether we want to auto-post the AP invoice batch that gets created, or whether we want to look for an open invoice batch for this vendor and add a detail entry to that invoice to accumulate the AP invoice trigger entries. And we can also define whether or not we want the AP invoice to have the source ledger of APIN as normal manually entered invoices, or if we want to define our own source ledger, for example, i.e. for inter-entity AP invoices. In summary, these are the 5 configuration settings you need to consider for AP reallocations. And finally, in the GL triggers, we need to define the trigger accounts. For our AP trigger, we first specify the trigger account 4213-1, This is the revenue account where we're going to record the rent owing to Entity 3. We are configuring an AP reallocation, so for any balance posted to 4213, Interentity will automatically create an AP invoice. And the vendor to be used for this invoice is 9003. And we have said that the account is not substitutable, so it'll always go to vendor 9003. If we had wanted to, we could have said yes, it's substitutable, and then specified a substitutional optional field, which would have a list of vendors, and the AP invoice would be created against that vendor. Put a different way, if you needed the same AP reallocation to go to multiple vendors, you could either have multiple trigger accounts or a single trigger account and the list of valid vendors in an optional field. And on the AP invoice, the offset account we are using is 4213-1. So it's going to reverse it out of the rent received account that we first recorded the revenue against. But we optionally could have used a different offset GL account here to record the rent owing to Entity 3. And to test this AP reallocation trigger, we have an AR invoice recording $200 to rent received for Entity 1 and $100 to rent received on behalf of Entity 3. Posting this batch in AR will have no effect, but when we post the batch in GL, this is where inter-entity transactions will raise the trigger account entries. In the IETGL triggers audit inquiry, we have the triggers entry. Posting sequence 102 batch 311 has created an AP invoice, batch 88 document 1, and the status is exported, which means it was successful. If there was any errors, we would see the status would be error, and in the message we would have the error message. And opening up the AP invoice reallocation that was created, we see the invoice entry. Had we wanted AP not to add tax, we should have set up this vendor to not automatically add tax. But here is the $100 that is now owing to Entity 3. And in the IET options on the integration tab, in the IET triggers GL to AP integration, we can define the AP invoice entry fields from the source GL entry. You will get errors in the IET triggers audit inquiry when the source batch is able to post, but it's unable to create the target batch. For example, our vendor 9001 does not exist in AP vendors. And when we open the IET audit inquiry, we will see the error message. We can filter the audit inquiry on these fields on the top, or we can click Ctrl F on any column to filter. Once we go ahead and correct the error, we can reprocess this entry through the periodic processing. Having corrected the error, in this case creating the vendor, we would go to the periodic processing, inter-entity periodic processing, select General Ledger Triggers Periodic Processing, and process the error entries. And back in the triggers audit, the error would be refreshed. And we will see the associated AP invoice being created. The next example we're going to do is an AR reallocation. We're going to record an AP invoice for leased equipment in Entity 1. A portion of the lease cost belongs to Entity 2 and Entity 4. We're going to automatically raise the AR invoices for Entity 2 and 4 to pay Entity 1 for these lease costs. The initial AP entry is going to debit the equipment lease expense in Entity 1, and then it's going to debit the lease expense account 4264-1, which is our lease expense account for Entity 2 and Entity 4. We're going to allocate $200 to Entity 2 and $100 to Entity 4. And it's going to credit the AP control account with $900. When this posts in the GL, IET Triggers is going to create two AR invoices against customer 9992 and customer 9994 for $200 and $100 respectively, and credit the accounts receivable control account with $300. The setup required for our AR reallocation is first to create our GL source code, GLIT, to be used for inter-entity triggers. Next, in Common Services, we want to create our optional field so that we can define the customer on the AP invoice entry. So for each detail line, we're going to say which customer we want the amount to go to. And we need to create our GL trigger account, 7264, which is going to be the expense account we're going to use for our equipment lease costs that we're going to reclaim from Entity 2 and Entity 4. And we need to have that same optional field defined at the GL transactional level. So we've got our substitute customer at the GL transactional level. We also need to attach the same optional field to the AP invoice detail. Then on the IET options on the Processing tab, we need to turn on inter-entity triggers. Because for our AR reallocations, we're going to choose the customer on the AP invoice detail entry level, we need to specify what optional field our substitute customers is going to be in. And for the AR trigger entries, we need to say, do we want to post the batch as it's created? We're not doing so. We can also accumulate an AR trigger batch, in which case each time a trigger entry is created, inter-entity transactions will look for an open batch for that particular customer, and if there is one, add an additional invoice detail line to the open invoice. If there is not one, it will create a new batch and add new invoice for that customer. And if you want, you can have a different source ledger. So instead of coming from AR, instead of it being an ARIN source ledger, it could be IT for inter-entity triggers IN. In summary, these are the 5 configuration settings you need to consider for AR reallocations. And on the Integration tab for the GL triggers to AR integration, we need to specify for all the AR invoice fields which GL source field you want to populate the AR invoice field with. So for example, the AR document description is being set to the GL transaction description, and so on. And finally, we need to specify the inter-entity trigger entry. In our inter-entity triggers option, we specify our trigger account, in our case 7264-1. So whenever any balance is posted to 7264-1, inter-entity transactions is going to create an AR reallocation. That is, it's going to create an AR invoice. And it's going to create the AR invoice against customer 9994, but the target account is substitutable at an optional field level. So it will look at the subst-cust optional field on the GL journal, and if it has a value, that's the customer number it'll use. If not, it will use this customer number. And when raising the customer invoice, the revenue account is going to be 7264-1, i.e. it is going to reverse the amount out of the GL trigger account the amount was originally recorded in. If you want to have a different revenue and expense account, you would specify a revenue account for the clearing account. Looking at our AP invoice entry, we would record the equipment expense for Entity 1 against account 7261, and for the equipment expense to be recorded for Entity 2 and 4, we would use our trigger account 7264-1. And for the amount that we want to recoup from Entity 2, we would specify the customer 9992 as the customer for the AR invoice. And for the amount that we want to recoup from Entity 4, we would specify the substitute customer as 9994 for Entity 4. Posting this batch has no effect. It's when the batch gets posted in GL that we will get the inter-entity triggers happening. Opening up the GL batch, we see the accounts payable entry, and for the amount going to Entity 2 and Entity 4, we have the appropriate optional fields. Substitute customer for 9992 for the $200, and substitute customer for 9994 for the $100. Posting this batch, we'd go to the Inter-Entity Triggers Audit Inquiry to see what batches have been created. And we can see for posting sequence 105, 2 AR reallocations have been made for customer 9992 and 9994, both in batch 87. The status is exported, so the transactions were created okay. And checking for that batch number in the AR batch list, we see the $200 invoice for customer 9992 and the $100 invoice for customer 9994. And the last example of reallocations we're going to go through is a GL reallocation. We're going to enter an AP invoice for audit fees in Entity 1, and a portion of the audit fees belong to Entity 5. We're going to automatically raise a GL reallocation to show the audit fees recovered from Entity 5 and owing from Entity 5. The initial AP invoice will debit audit fees for $400, debit audit fees recoverable from Entity 5 of $300, and credit the control account of $700. And when this posts in the GL reallocation will credit the offset account, audit fees recoverable, and debit audit fees for Entity 5. And because we have inter-entity transactions turned on, then when this posts, inter-entity will raise the due to and due from loan account entries between Entity 1 and Entity 5. The setup required for this GL reallocation is first to create the inter-entity triggers source code, to create the required accounts, for example, our trigger account 7605 for audit fees recoverable from Entity 5. And then in the inter-entity options on this processing tab, we need to turn on inter-entity triggers and we need to configure our source type. For our GL reallocation, because we're not specify the account to reallocate to in an optional field, we can leave this optional field blank. In summary, these 3 configuration rows need to be considered for GL reallocations. And on the integration tab, we need to specify what values to send from the source GL transaction to the target GL transaction. And in our inter-entity triggers, we need to create this trigger row. Our trigger account is 7605-1. So any journal posted to that particular account will be a trigger account. The offset account to be used is the audit fees recoverable for 999-1, and the target account is the 8000-5, the Entity 5's audit fees. And because the account is not substitutable, the target account will always be 8000-5. In our original AP invoice, we record the audit fees amount for Entity 1 and the audit fees amount to be recovered from Entity 5 against the trigger account 7605-1. Posting in the subledger has no effect. Inter-entity transactions works at the GL level. Opening the GL batch, we see the AP invoice entry, credit to the accounts payables trade account 700, and a debit to Entity 1's audit fees and a debit to Entity 5's audit fees, but those are recoverable by Entity 1. When we post in the GL, it is at this stage that the inter-entity triggers are automated and included in the original source batch. The first 3 lines are our original accounts payable invoice. And then because 7605 is a trigger account, inter-entity triggers raises the trigger entries, and we can tell those by our IT source code. The offset account is credited, and the target account is debited with the $300. And then because Entity 1 and Entity 5 are separate entities, the loan account entries are raised by inter-entity transactions loan account automation. And all of this is included in the source batch as it posts. We have just seen the GL setup required for triggers. We needed to create an IT source type, create optional fields if we're using target account substitutions via optional field, and we needed to create the necessary trigger accounts. In inter-entity transactions, we needed to turn on the triggers, configure the source type and the optional fields if we're using them, and configure the GL triggers. Then we needed to post the GL batches and check the GL trigger audit entry for errors if needs be. Thank you for watching this training video on inter-entity triggers. For more information on inter-entity transactions and other products, please go to www.orchid.systems.